Good morning. This is Andrew Benioff with Lenrock Group and the Lenrock blog, and we are lucky enough to be sitting down today with Howard Sipzner. Howard is Executive Vice President and Chief Financial Officer of Brandywine Realty Trust, a office-focused REIT based here in the Philadelphia regional area. Howard, thank you very much for joining us.
Thank you. Good morning, Andrew.
Good morning. So we're just going to talk a little bit about Brandywine and REITs today. Thanks to their stability and returns, equity REITs have been receiving a great deal of attention in recent years. How does this increased attention affect interest in Brandywine and the decisions that it makes? And does this extra attention create new challenges for you?
Well, Andrew, that's a great question. And those who follow the financial marketplace know that REITs as an investment category have outperformed the S&P. I think it's in 8 of the last 10 years. And the reasons for that are pretty straightforward. REITs are, for the most part, an income producing and income passing through vehicle. And they provide excellent investment returns to investors. And we've been in an era of either increased risk or decreased returns. And the combination of those two factors has led a lot of investors to emphasize REITs of a variety of types in their investment portfolios. So this has been, for the most part, a golden age for REITs in terms of market interest, market acceptance. Now that the capital markets have stabilized, you're seeing a number of new formats come public, and I think we have investor interest both in the U.S. and really globally at an all-time high for REITs.
Wonderful, wonderful. Thank you. What are the greatest challenges that come with working in a large public REIT, a large public company platform? Can you tell us about some of that?
Well, REITs, and we'll ultimately focus on Brandywine Realty Trust in particular, REITs are in the business of owning, operating, leasing, developing, managing real estate. And real estate is a capital-intensive business. So one of the top challenges, and Brandywine's not different from anyone else, is maintaining access to capital and regularly raising capital. So for example, just at the end of 2012, we saw an opportunity to take advantage of both attractive credit market conditions and also attractive treasury rates. And we issued unsecured notes, obligations of the company, of a 10-year term at a rate of 3.95%, just a phenomenal rate. So we have borrowed money for 10 years, $250 million at 3.95%. That's just a great rate and a great piece of our capital structure. So we always have to keep an eye on the capital markets, take advantage of opportunities. Once that's taken care of, we essentially take a step back to our core business, which is leasing space. And as you know, Brandywine is in the office space. When we're sitting here at the top of one of Philadelphia's towers looking out on a beautiful skyline, we own quite a few assets here in the Philadelphia market as well as surrounding markets. And our business is attracting tenants, serving those tenants, and addressing their real estate needs. So our business of leasing space is very much tied in to the economy as a whole. When the economy is doing better, tenants are more constructive, they're more growth oriented, and as a result, they're more willing to make long-term commitments to longer and larger blocks of space.
Wonderful, thank you. Last question, Howard, before we let you go is, Brandywine is best known for office properties. What factors motivated Brandywine's decision to work with Toll Brothers on residential projects, and how does this decision fit into Brandywine's larger investment strategy?
Okay, our overall strategy remains to be primarily and substantially an office-oriented real estate investment trust. We'll emphasize key mid-Atlantic markets, Philadelphia, Center City, the Philadelphia suburbs, the Metro DC area, parts of southern and central Jersey, Richmond, Virginia. We have properties in Wilmington, and we also have some smaller holdings in Austin, Texas, and in southern and northern California. So for the most part, we are and are going to remain an office-oriented REIT, increasingly focusing on urban and transit-oriented markets. However, at the margin, it is inevitably going to be the case that many of our land holdings will be better suited in both the short run and the long run for alternative uses, in other words, not for office. So in the case of the Toll Brothers joint venture, we had a piece of property up by the Plymouth Meeting Mall, north of Center City, Philadelphia, that was always thought of to be a office site, but it turned out the growth of the residential market north of the city has been so strong, the transportation network up there so attractive, that we decided that for that particular piece of property, residential use would make more sense. Once we reached that conclusion, we said to ourselves that we don't have residential development or management or operational expertise. Let's find a partner with whom we can realize the fullest potential of this property. And in a relatively short period of time, we realized that in this part of the Mid-Atlantic region, there's no better name than Toll Brothers when it comes to residential development. Historically, they've been more of a single-family home developer, but they're increasingly moving into multifamily. It's been a great partnership to date, and we expect to break ground on that project sometime in the early to middle part of 2013.
Wonderful, wonderful. Thank you very much, Howard. This has been Andrew Benioff for the Lenrock blog, and with Howard Sipzner of Brandywine Realty Trust. Howard, thank you for joining us.
Andrew, a pleasure. Thank you.
Have a good morning.
Okay.
Thanks.